Uranium Friends checking in on next gen. So, quick look at the monthly, and I've talked about this many, many times. So I'm going to be quick. Next gen has made a monthly higher low every month since April of 2023. Why is that relevant? Well, it's relevant because there's a lot of people out there talking about the CEO and the compensation and all that stuff. Don't play or try to trade fundamentals. It's a waste. It's an absolute waste, okay? All this time, everybody was talking about how bad next gen was, but every single month for almost an entire year, next gen has made a higher low, okay? So, you want to get caught up on these fundamentals. You want to say, oh, it's a disgusting company and it's disgusting what they do. Go ahead. Okay. I'm making money on these runs, big money. Okay. And this pattern of the higher low every month has not changed. It hasn't changed yet. So, it's all systems go on the monthly as far as I'm concerned. And like, if you really want to try to get an early look at the metric, well, it's the yellow line, which is the 5 EMA, and it's just respecting it all the way up. So, you can do whatever the heck you want as far as what you think about the fundamentals in the company. I mean, Rick Rule interview, which I rarely watch, but I watched one recently. They asked him about next gen, and he had one word: it was undervalued. So, you guys do whatever you want to do. All right. So, I've talked about the weekly possibility of the weekly head and shoulders over and over. And we will just take a quickie look. Okay, let's just make sure, in case someone hasn't been paying attention for whatever reason. Okay, you've got your head and shoulders set up. Okay, things are a little bit interesting right now because the dynamic, which I talk about over and over with this weekly 12 EMA and 50-day moving average rider, well, it had its little undercut and has regained it again. This was the inclusion into the ASX 300. I think that's the announcement there that really got this thing going. So, you can look at these moving average riders, and it when it breaks, and it gives you a good piece of drawdown. It this was a snapback rally on it, so which leads me to believe that maybe, hey, it's possible. And now we're still holding. For the past 3 weeks, we've still closed above it. So this trend metric of these moving averages is holding. It's just that simple, right? So, but back to this weekly head and shoulders, and let's see what we can take out of it, because there's a lot of chop going on right now, and it's tough to make these plays. Like shorter term traders or positional people that are trying to position here, it's tough because it's whipping around, right? So, but the inherent nature of a measured move on a inverse head and shoulders or a head and shoulders is, you take the head and you measure it to the neckline. Now, this is a pretty good neckline, right? So, and this is the range that it's starting to establish as well, that what NXE is doing. So, the range is actually defining the head and the neckline pretty much. So we're talking about $1.60. So if you take that measured move to a dollar from 670, you go down $1.60. Well, it gets you to $5, right? And that gets you down to this area over here. So if the true nature of the head and shoulders plays out and it follows its measured move, well, the bears that are playing this head and shoulders pattern, they're going to say, all right, I'm trying to play for a $5 target, maybe a little bit higher, maybe a little bit lower, somewhere in that area, right? So maybe they trim along the way. You got some volume on the profile here that's starting to build up, but this is where there'll be some volume support also. So there's a lot of things technically that line up for the bear case on this to go down to the $5 area. I mean, it's just that simple. But there's also things that are lining up for um, a continued move up, right? So again, the monthly consolidation, higher lows for the past year, basically. The regaining of the true trend metric for this name and just about every other name in the space, regardless of what any other technical analyst says about it. It's just clear as day. If you can't see it, or you don't want to see it because you want to look at some other Heikin-Ashi candles or Wyckoff patterns, whatever you want to look at, you go ahead. But it's as plain as day, right? And it's all about trends, right? We want to commodities love to trend. I say it over and over. So that's the look, right? And you're right smack in the middle of the range. So for me, this is like a hands off because it's right smack in the middle of the range. So what I need to do, what I need to see, is to see how it plays. So, if it takes out maybe this weekly high, which is at 782, well, that gives me a little bit more of a positive sign, right? But you can be sure that the people that are looking bearish are looking to short up here. There's no question, right? So, and that's just how trading works, right? And the bulls are going to be looking to go long down here near the bottom of the range. It's just how it plays. So, in the middle here, it's like no man's land for me. And I'm sitting back and waiting and watching. My cores are down. I am looking for reloads in the space across the board, really. I nailed a little bit of global today. I'll probably make a video on that. But I think that's probably still going down a little bit more, seemingly. So we'll see. But we're talking about next gen, so it's in the middle of the range. I have no bias, bull or bear, either way on this right now because there's mixed signals, right? So we're looking on the daily here, and there is some things that I've kind of picked up. So I've done a fractal. I've made a little bit of a fractal pull. First of all, Ben from East West loves these parallel channels, and I get it, right? So, is next gen now starting to establish, its trend again? Maybe, right? So it's starting to show a little bit of movement with these channels, but we're also starting to see these rejections here on the mid channel midline. So again, mixed signals across the board. So I don't really, again, it's to me it's no man's land, right? So then another thing that you might want to look at is the Fibonacci's, right? So the fib pull from this swing low to this swing high, it gets you down to this 61% golden pocket retrace, and it held. you know, so and fib traders, people that play fibs, will say, okay, well, I got the bounce on a 61% retracement. I'm looking for the target to be the 61% extension. And if you see that, it gets there on this channel. This channel gets you there also, right? So what else? I'm starting to, formulate some sort of plan. Like if there's a bull break on these, on this, these weekly highs, then maybe we can reasonably assume that there's a possibility that it gets up there, right? So what's something else that could be in favor? All right. So here's a fractal pull, and this fractal pull is from this last drawdown, which, by the way, looks very, very similar to the drawdown we're facing now, right? So and I'll show you this. This is the pull, okay, next to that new high. So if you take this pull and you kind of drop it on there, well, lo and behold, right, we're starting to see that it could hit that target. Just another chalk up into the Bulls' favor, at least for continuation on next gen. So, this is not predictive. This is just the stuff that I look at when I'm looking at things. And the thing is that, yeah, okay, maybe is it unreasonable because maybe because some guy on Twitter says that they're overpaid CEOs and compensation packages and whatnot. I don't know. You take that however you want to take it. So another chalk up in favor for the Bulls here on this daily, and I've spoken about this many times, and I will speak about it again. I love when the EMAs start to bunch up together, right? You see what happens when we get these stretch outs. They like to reconcile and bunch up, and they're kind of doing it now. And It's still chopping about throughout this, but if we start to see this moving average stack, um, oh, sorry, if we start to see this moving average stack act as support, well, that's a good sign as well for the bulls. So, end of the day, end of the video says right in the middle of no man's land, there's some things that are working for the bears. There are things that are working for the bulls. Um, the bulls have the advantage right now in the long term, right? And that really shows us. It really shows up on the monthly for the bulls. Okay, and you can go fundamental nutso however you want, right? You can talk about CEOs and whatnot. The way I see it, even if it comes down to the 12 EMA on the monthly, $6, right? Then you have to rethink this weekly head and shoulders, and that maybe it is going to play out. So, uh, at the end of the day, it's in the middle of no man's land by many metrics. So for me, it's kind of a no touch. I mean, if I was going to do anything, I would just try to get some cheap leaps. You know, $9 leaps maybe for 2 years out. I don't know. But in my opinion, I'm not doing anything. I'm waiting to see if there's a resolution on what the price action here. And it would be dependent on the rest of the space as well. All right, over and out. Maybe I'll talk about global. Goodbye now.